Good morning, everyone. Welcome back to our SPX Daily Plan. Yesterday, we saw some of the earnings of some of the tech companies. We had Microsoft, Meta, and Tesla. We're going to talk about it today. Before we go into the details, let me just share our disclaimer, and then I'll pass it on to you, Doc. All right. Welcome back. And if you have any questions, guys, send us a comment. And Doc, take it away.
Okay, good morning, everybody. Let me just want to put something in the chat. So, copy text, paste. Okay, so that's my daily plan. And I kind of prepared something last night that I don't have posted, but I'll talk to Fabio. Maybe we could do something. It's basically an outline of how I compose my daily plan, and maybe one day we can walk through it, or maybe Fabio could do some kind of special email where people want it. We could send it in. We could do a special session or not. I just sprung this on Fabio. He doesn't even know about it.
Yeah, that's perfect. Yeah, let's do it.
Okay, but anyway, that said, so as we all know, we had the FOMC yesterday, where we had relatively typical reaction. The let me zoom in on that time frame, where we kind of vol stayed. We stayed within a tight range. We don't get much volatility or compression or movement ahead of an event, and we put out a little note on that on X yesterday about how volatility affects theta and everything else. That said, we had the minutes released, and we kind of had the drop. It's almost comical how typically first reaction wrong. And once again, the algos brought us down. The press conference, Powell walked back a lot of the stuff. I'm not a macro bro, but sounded like he was a lot, like they changed some of the verbiage and everybody got excited about it. And then when they asked him about it, he goes, oh, just to like make it less verbose and a little clearer or something. And then the market rallied. So long story short, we kind of closed down from the open, but pretty much within the expected move, which was shocking to me. We had like a pretty narrow expected move. Now we went outside the expected move intraday by a little bit, but we kind of closed within the expected move, which was kind of surprising for an FOMC day. FOMC and big tech earnings overnight. So overnight we had the big tech earnings, and we're going to kind of talk about that at a little bit more length. And so, like I said in my note there, you could I think you can read it in it's in the private chat. Fabio, you can put that in the comments thing. The big tech earnings were broadly positive. Again, the usual. First reaction post market was down. We could see what happened. Tesla, Microsoft had a similar kind of reaction. Went down to 417, and now it's kind of hanging near that 420 level, and we kind of have to get back over this area for it to get moving a little bit. And then Meta had good. Let me find Meta on the thing here. Meta had a positive reaction, kind of went above 700. I'm guessing maybe some short covering or some quick hedging for people who, there were 700 calls coming in the last couple of weeks, different expiries. So this is kind of gonna kind of have to be hedged out. Now let me say a word about post earnings and gamma and looking at charts. And this is my thing. I don't know if anybody has officially talked about this. I think that one has to use these levels with a grain of salt right after earnings, because as volatility comes out, the amount of hedging response required from one day to the next as deltas change, as price moves, as customers adjust positions, has to be taken with a large grain of salt. What we do know, or what I think we know, is when it exceeds the expected move, then we get these crazy, and we had that last earnings report on a few stocks. It might have been Tesla, it might have been CRM, where we popped all the way out of the and Snowflake, where we popped way out of the expected move. And then the market makers had a hedge to chase and then come down. So long story short, give it a day or two for vol to reset or whatever. These lines still tell us where market participants are, but the reactions there are not going to be quite as clean as we might normally expect. And as I mentioned in my note, we also have earnings upgrades, downgrades, market on open orders, talking heads about these earnings. And so to the extent that these are large weights, large constituents in the SPX, it's going to influence price movement. So that's all kind of nuancy to the broader theme that reaction is broadly positive. The Qs, which is where these guys live, is up right near this 525 inflection point resistance level. If it gets up, then we kind of chase up, a little bit. Look at this as kind of a chop zone where we were the last day or two. So that's Qs. Let me get back to SPX for a second, though. And so then after looking at where we are in the complex, and it basically looks like we're up from the close, but we're kind of, it shows ES up like 17 points, so we're up somewhat from the close, but we're below this 50 inflection level. Wrong chart. Okay, there we go. That makes more sense. So we're up from the close, and we're up over this 50 inflection point, and this area I identify as kind of a chop zone, and so we kind of have this 40-ish area right above where we closed. We can say, the close area down here somewhere, and the post-market, the aftermarket highs up here, yesterday's high, as kind of what's going to be our chop zone. And I think that we kind of broadly should, quote unquote, stay within it. Gamma is relatively thin. This shows us where the reaction zones and levels are, but doesn't really indicate the intensity. And so gamma is kind of broadly neutral. I personally don't like to think of gamma as positive or negative, although there is a broad exposure and it's broadly neutral to positive. But there's local pockets of positive or negative gamma. There's local pockets of where market participants are long or short options. And so market participant is long an option, the market maker is short that option, and those areas become magnets. If the market makers are short, they become cushions, and so there's some. And in my note, I go over through some of the OI levels where I kind of try to figure out where market participants are long and short and where the hedging is likely to go. And I talk about that in my daily note. So let's see if we could do this without messing things up. Looks like I did. Okay. So here I'm just using a simple open interest. And we see big open interest here at 6,100. So that's your upside target if we can get over, let's look at open interest again. If we can get over where there's open interest here, there's not a lot of open interest here between that level. So there's really not a lot of hedging response that we can expect over here. So this is the big inflection point up here, and stuff above 6,100. We have volume, we have open interest up here. So I'm going to say people are selling that. I don't know. So we'll say up here is kind of a cushiony zone. And then let's do the same exercise over here with the puts. Now we see 59.50 out of the money puts, nothing really to worry about. 6,000 round number. That's, we have volume, we have pre-market action there and open interest there. So that's kind of like your downside pull, so to speak. Now I'm just going to order it by strike, by level, and kind of see what's going on here. And so once again, we see the 6,000. Not a lot of stuff in between. To whatever extent this is accurate. Now we're going to go over to the dashboard. This is on the Mental Q website. Fabio will explain all that stuff to you later. And here we just get a nice clean view of kind of what's going on. And so here's today, and you see that large 6,100 call strike. And you see we have a lot of sticky stuff here down below. And so the default position is that we don't have a lot of strong hedging response. We can see the curve here as we can go up into this area. Should we break below this area, we can accelerate downward. And so a little bit of what I do is I look at where the large open interest is. I kind of have this sort of mapped out. I look at where the key strikes are, where the key inflection points are, and kind of hypothesize the path and what the dealer's hedging response should be if levels break. So let's get back to the chart. And so we're kind of in this positive zone over the 60, 50, 45, I call kind of a transition zone, flip zone. 60, 50, the round number, that's always going to be psychologically important. And like I say, time of day matters. I mentioned that. So for tomorrow, let me switch gears again. Now let's go over here. Let's remember, and for those of you that don't keep track of this, I will remind you that we have 9,000 short calls here that JP Morgan sold 3 months ago, the so-called Mama Bear Fund. So now we don't know how many people have transacted that, but we do know that JP Morgan doesn't touch these, doesn't move them. It's in their perspective, we know that. So we know that feature is there, invariant is there. So what does that tell us? What does that tell me? You can tell you whatever you want. It tells me that that area, as we get closer toward the end of the day today, and more so tomorrow, should act at least as a support. If we're above it, it doesn't really matter as much. As we approach it, it should act as a place where market makers have to buy, and we have 4,000. We have this open interest in here. So this that I guess adds a little support or confluence to my thesis that even if we go down today, we shouldn't break much below this, especially toward the end of the day. And if we have a negative day today, that this area should become sticky, magnetic. If we go down to 6,000, say tomorrow or whatever, this area could be magnetic again. Now, that said, we have GDP at 8:30. We have GDP at 8:30 today. And so we all know the whole macro inflation narrative going on. And so that may or may not set the tone for the day, depending on what it is and what the algos think of it, and how market participants are sitting in relation to that. We have PCE tomorrow, Wall Street Journal headline, the Fed's preferred measure of inflation or gauge of inflation. So let's pretend that matters tomorrow more than GDP matters. We also have unemployment numbers today. So tomorrow matters. I don't know that market participants are going to kind of want to get out over their skis too much, predicting what that is going to be. That's another reason why I think we kind of stay within an expected move. I also mentioned in my note that now let's take a look at VIX. We'll look at some of the volatility measures. I never know which VIX I have up here because there's lots of different VIXs. I can't read it clearly over here. Let me move it. Okay, here we go. All right, so here's standard VIX, 16, 1% move. Your nice default VIX, I like to think of the 16 VIX. We know it's a 1% move, makes stuff easy. But that's a 30-day VIX. Let's just keep that in mind. The 1-day VIX, which is a suspect measure, is also at 16, so it's kind of telling us a 1% move. The 9-day VIX, a little higher than the VIX, so a little short-term nervousness compared to long-term, but fixed strike vol has been sticky, and so out in time, depending where you want to look, you look at the 3-month VIX and it's higher, but we expect that normal contango. But the point I want to make though is intraday, what I like to do, and again with my wise ass comment, you can do what you want, is let's just say we're going up and I see VIX down around here somewhere, heading lower. I'm going to think, are people going to start buying protection, hedges, whatever that is? I might look at VIX, I might look at VIX 9D, I might glance wherever I'm glancing to see if it starts heading higher, and then I might want to think of changing from a long to a short or vice versa. So this is something that I'm going to use intraday along with other things just to give me a feel, and I'm expecting, don't know, that should VIX or whatever volatility measure you like to look at, recede too much intraday, if we start looking bullish, and if we start getting, now we're back at that 60-50 inflection point. If we should somehow get up here, 75, 85, whatever, and VIX comes down to 15 spot 75 or something, I would expect it to get a bit, and I would expect us to turn around. Okay. Now let me see, is anything in the comments? Let me take a quick look. Okay, you put that in there. When does bar chart get updated? I think they're 15 minutes behind. You're seeing a different set of numbers in bar charts. I don't know, maybe I have to refresh it. I'll take a look. Well, let's get back to this. We'll get back to bar charts. Because I wrote my thing based on bar chart numbers that looked a little different.
We have a question from Tim, Doc. If you can talk about dispersion in SPX.
Okay. Let's talk about dispersion. I know that's one of Tim's favorite things. Let me just type in the dispersion index. Indices. What's the, I know I have the symbol somewhere. Let me just see if it's easier for me to find it here. Correlation, here it is, dispersion. Okay. So actually dispersion is kind of high, isn't it, Tim? We haven't seen dispersion this high in quite a while. And let's compare the dispersion, because it's kind of interesting when we're seeing dispersion high. So there's a lot of variation between how different components of the index are moving because of volatility, because of the the different earnings vol, etc. But just as he said, this is not something I normally see. Very normally we would expect dispersion to be low when correlation is low. Correlation implies that things move together or move separately. So here it's saying things are moving together. Here correlation is low. When we have when correlation is high, everything moves together. Everything goes down typically. When correlation is low, then things kind of rotate around and the market tends to chop more. That's a very good question because it's unusual to see this. I'm gonna reach out to some of my guru friends and see if I could find out a mathematical reason. Intuitively, kind of like what Tim was saying, it seems to be earnings related, and that's the best I could do with that. Yeah, earnings related and earnings volatility related. And maybe it's dispersion. Yeah. Yes. So what dispersion is, in case people aren't familiar, and Tim kind of gave me a little prompt to tell you guys, I suppose, is that in theory, the dispersion trade is sell index volatility and buy volatility, i.e. options, puts and calls, whatever, buy gamma, buy volatility, buy delta, whatever you want, however you want to think about it, in the underlying constituents based on whatever magic formula, secret sauce that the different hedge funds use, with the idea that you're getting the larger volatility in Meta for the price of uh, uh, for the cheap price of what you sold in the index. Broadly, the theory, quants and geeks don't murder me, but that's basically the idea. And so it's unusual that we see this. Very unusual. Okay, we looked at Meta. And just to throw more complications into the game, fixed strike volatility is kind of staying sticky. At the money volatility short term is staying uh, relatively tame or coming down a little bit, but out of the money volatility out in time is still getting bid, especially for March. So people are still nervous. All right, so I'm going to get back to NVIDIA for a second, and then I'm going to do some semis because I trade a lot of semis. They move a lot. And I get, okay, so NVIDIA, after the news came out yesterday, they kind of popped right toward that 125 level, came down. Now it's kind of struggling around the 120 level. Needs to get over 124, 125 to kind of get this kind of move. Now I watch options volume, and there been a lot of puts for coming in NVIDIA. Long story short, 130, 100s, 110s, 120s, different tenors. And let's change gears for a second. Uh-oh, can I find the, uh-oh, I'm lost. Let me not change gears because I got lost. Let me see if I can figure out where okay. Somehow I lost my screen, and I don't know where the screen I'm looking for is. Here it is. Okay, found it. I'm not a techie, guys. Let's just take a quick peek at NVIDIA while we're on the topic. I think some of you might have heard of this stock. And let's look at, okay, so even if you're not watching unusual options or whatever it is, the risk reversal here for NVIDIA, so 25 delta puts are bid 12% higher or whatever, way higher than calls. That is extremely unusual for NVIDIA. That is extremely unusual for people to be more interested in the puts than in the calls. And so that's a warning sign, yet at the same time, if this volatility doesn't realize, if NVIDIA doesn't crack, then that's potential energy to the upside. At some point, these calls look cheap enough for somebody to buy at the money 125 calls, maybe 130s out in time, whatever. They have earnings coming up. And so, I will probably be looking for an opportunistic long in NVIDIA because that's how I roll. We have this metric over here. We see we can get like an idea of some key levels here. And over 130, that's kind of on a longer term to get through. We can look at NVIDIA kind of this way to maybe better visualize what's going on. And so we see Here's his short-term puts near spot that's kind of keeping us stalled. But as we look out to Feb OPEX, we get over this 125. This can flip a little bit, but we have some puts. We have this dead zone here where we could get stuck or run through. We go out into March, and it's kumbaya. Everybody, people seem to be interested in NVIDIA over 125 up to 150, kind of the all-time high area. So we have multi-time frame disagreement. A lot of people like to get all their time frames in alignment. And we have a lower band to NVIDIA here down at 112. Would I sell puts down below 112? Yeah. Would I sell 100 puts? I'm going to look to sell some today. Or spreads or whatever you like. And I'd be willing to own it at that price. So if you're not willing to own it, if you're willing to own it, it's a different thinking, not a recommendation to buy or sell securities or whatever the official disclaimer is. Let's get back to, okay, so now the reason, as I'm sure everybody is aware, the whole DeepSeek China AI story and how they are able to do it with less expensive chips and with less chips was kind of like a dagger in the heart of the NVIDIA story. However, the talking heads, I suspect, will be coming out and telling us, and this is what I was mentioning before, that Meta and Microsoft, whether they like their earnings or not, both told us that they're keeping their CapEx spending the same. They're not cutting back on spending. And we already kind of know that they have all big orders in for NVIDIA chips. And they're not cutting spending based on this new world that we found out a couple of weeks ago with this DeepSeek. So I suspect, I don't know when, that the NVIDIA narrative comes back bullish at some point for a while. I don't know. I'm not an analyst. I'm a trader just like all you people. But that's kind of what is in the back of my mind. And yeah, I can front run it. I can wait for it to happen. And to the extent that NVIDIA kind of dictates a lot of the action, that's something to keep in mind. Let me switch gears to software, because when the narrative switched to, this is IGV, the software ETF, when the narrative switched to from hardware to software with this new AI model, a lot of the software names got a bid. We see we had a pop. I saw volume coming in at 110. IGV calls out in time. Don't know if they're buyers or sellers, but there's interest way up there on a shorter term time frame. These are the levels. There's not really enough open interest in this to drive hedging response. The open interest in Microsoft or in, whatever, Salesforce dwarfs this. So I use this more as almost technical analysis. Like, this is where market participants are placing their bets or are hedging or are hedging their portfolios. And so watching software to see if this can get going. But Microsoft is a large component in this, and so is Salesforce. So this is kind of coming down. Now, going back to my beloved semiconductors, we had GDP, and I don't see a little bit of a red bar. We'll go back to that in a minute, and then I'll kind of wrap it up so I can get some trades lined up. Let's find LRCX. Oh, it's not even on my chart. Blasphemy. Let's see. Oops. Well, SPX. Oh, it is on my chart. Okay, couldn't find it. Full disclosure, I'm an owner of this stock, have been for a while. I think it's based on what I know, which is no more than anybody else, that it's a really good semi name, and I think it's even a buy here. I liked it as a buy where I got into it down here, and I kind of added nibbles. I actually got into it, remember they split, whatever. So this has been a great trade. Selling puts, buying calls, adding shares, selling calls against the shares, buying them back. It's been fun. Um, but if we go back in time, just to get perspective on this name, if we go back in time, this thing was once like this is the 10-for-1 split. This thing was touching 1,000. And so people are underwater if they were in near the top, the recent local top, like in January earlier in the year, and then they kind of had a pop again. And so it's getting toward the top of the range. So, TA thing, be careful, but we have 85, maybe we'll go to, but I'm looking at this just as as an indicator of interest in the semi space. LRCX beat, ASML beat yesterday. I'm not sure when we have AMAT coming up for earnings. Let's see. We have AMAT earnings when? I don't know. I don't see the earnings thing here. Oh, AMAT earnings aren't coming up until later February. So if you want to get an AMAT trade in for earnings, there's time. If you have a crystal ball, you know what the earnings are going to be. So yeah, I still think we need to see semis get back into somewhat of a leadership role, or at least regain some of their luster to be able to really power higher. But like we saw with correlation and dispersion are giving us mixed signals, and we've been seeing breadth broadening out into other sectors. Maybe the semis can just kind of stall and consolidate, and everybody else could do the heavy lifting. Just kind of thinking out loud here. With that, I'm going to want to look at one more thing, and so let's switch our thinking for a minute. So XLV actually has been quietly outperforming the index year to date. The medical stocks that couldn't get out of the way, and they were getting killed in November, December because of Robert Kennedy Jr., are suddenly kind of catching the bid. Are they the surprise? Are they the surprise star? Are they the quarterback that wins the MVP award for the comeback player of the year? I don't know. I have a small bet in them. XBI, they're more emotional, volatile cousin. I just like selling premium in these names. I own some shares from a million years. I like to sell calls against them. Kind of catching a bid, sensitive to the interest rate narrative because a lot of these guys don't have any money. Next time I should look at IBB. Next time I should look at IBB. One more index I want to look at is IHI. If you're not familiar with it, do I have it on my list here? I don't see it. Oh, maybe it's at the bottom. It's not alphabetized. IHI. IHI is in medical device companies, medical device makers. Think Medtronic, Boston Scientific, Zimmer Biomet Holdings that makes hips and knees, Medtronic, pacemakers, Edwards Life Sciences, stents, all those guys. ISRG, intuitive surgical, robotic surgery. Now, I think as my generation, I'm 71, age out, and need more hips and knees and pacemakers and all that stuff, technical term. And as AI improves and how they can use it, that this narrative is beginning to pick up steam and will continue to pick up steam. I'm going way over my skis here from an SPX daily roadmap game plan to a pretty broad narrative here, but that's kind of how I roll. And so that's something to think about. And if we bring it back just into the context of SPX, people are looking for what may drive the markets, what may drive the economy. And that's going to filter into SPX. See that? See how I kind of made that square peg fit into the round hole? And so coming back to SPX, we're at that 50 level. So gonna kind of have to see, watch the market on open stuff, watch how the big names act, see what volatility does. And let me see if I got this right. Let me take another look at bar charts for the person in the chat that kind of had different stuff. Let's see what bar charts is showing us now. Open interest. It's showing, okay, let's go by strike. So it's just kind of easier to see where the levels are. And I know on the website, Fabio, you can talk about it when I'm done, how we get daily intraday volume updates and where that is. I don't use it that much only because I'm all over the place, but yep. It's an easy way to find it. I'm looking at other things and, I'm just going to look in my Thinkorswim options chain. I'm just going to look where I am.
Yeah, Doug, let's see if we have more questions. Guys, if you have any question, let us know. I can show where the intraday stuff is. Let me share my screen. So for all the intraday data, you can come into the dashboard, click on the Ask section right here. And then what you would do is you would type in your ticker. So today we're going to look at Tesla after the market opens. You can look at your intraday data, or you can look at your end of the data. What we want to see as the market opens is probably going to be the change in gamma versus the previous day. So this is the data as of this morning. So with the updated open interest, but this is going to update throughout the day. So we have about 9 snapshots throughout the day. And what you want to see is how much gamma changing throughout the day after obviously the open price. And then also you can also look at our volume. This is going to be available at the open. I don't think it's available now. And also at our gamma measure chart for the whole chain. So
okay, if there's no other questions, I see Corey put February 13th in there. Well, is that expiration? I'm wondering what February 13th is.
I'm at earnings.
Oh, earnings. Okay. Well, when do we have expiration just for fun? Is it before or after? Well, stay tuned for talk about Vixpiration and Feb OPEX, and after the tomorrow monthly OPEX, and we get to have fun with monthly OPEX, then we have PCE tomorrow, then we go into the non-farm payrolls next week. We have most of the big tech earnings out of the way, Vixpiration, Feb OPEX, and then do we have the typical March bottom penciled in? Stay tuned, folks. See you on Tuesday.
All right. See you guys. Have a good day. Bye-bye.